think of on-chain data as being, effectively the fundamentals. What are the cash flows? What are the economics? What are the incentives that are driving this behavior? And everybody wants to quantify that, whether it be what did I hold when and what price and where did it go, to what, the ability to introspect and to understand cohorts of other investors. Well, if they held that token, what else did they hold? How long did they hold that? Where did those tokens go?
Hey everybody, Tanner here with WAGMI Ventures. On today's podcast, we have Shawn Douglas, CEO of Amberdata. For anyone who's new, this is the WAGMI Ventures podcast, where we do company snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Shawn from Amberdata. All right. Hey, everybody. Today, I'm really excited. We have Shawn Douglas, CEO of Amberdata. Shawn, how's it going today?
Doing great. Thank you very much. Excited about the opportunity to be on the show.
Yeah, definitely. So for the listeners, maybe just would be helpful kind of a little bit about your story and how you got to what you're working on now with Amberdata.
Yeah, absolutely. So I don't know, I guess I associate with being a Silicon Valley guy, been in the Valley for a really long time. Got involved in I've done a lot of startups and worked at big companies, and then got exposed to crypto, really Bitcoin first in 2012, and then Ethereum later, and just started to get really excited about the space.
Yeah, I love it. So Amberdata, what's the best description of what Amberdata is doing?
Absolutely.
What company is Amberdata?
Yeah, so Amberdata, what we do is we provide comprehensive crypto economic data or digital assets data, primarily for institutions, and we enable them to accelerate their time to market and build data-powered applications, whether that be trading or portfolio management, research, risk, tax, accounting, compliance, audit, type of applications or businesses on top of our data. And we make it simple for them to get the data that they need, where they don't need to connect into 30 different centralized exchanges and 15 different blockchains and try to interpret what's happening in each smart contract.
Yeah, super interesting. So just to make it concrete for the listeners, like what kinds of things are people using the data to do?
Yeah, so we have, if you kind of walk the spectrum, there's, I would say first and foremost, trading and understanding opportunities and quantifying risk in the financial markets around digital assets. So we have customers that are doing arbitrage between centralized exchanges and decentralized exchanges, providing liquidity in various decentralized exchanges or in lending protocols, or they may be executing liquidations in Aave or Maker or Compound, or they may be looking to generate yield via yield farming, or maybe even spanning spot market versus derivatives and playing the yield curve there. And then, part of trading in financial services is there's an entire value chain, front office, mid office, back office, and the input to all of those applications is data. And so we provide that data and ultimately interpret that data into time series so that they can build their applications and their businesses that serves the entire value chain across the ecosystem.
Yeah, super interesting. I'm curious, what unique challenges existed for or currently exist for aggregating and kind of providing this data across chains and tokens that might have been different given just the nature of Web3, right? Like, it seems like just intuitively, it seems like it would be a more complex project to build a company.
It's
doing that.
Massively complex, more complex than I'd imagined when we started it, to be honest. So let's first start with centralized exchanges, because there's significant complexity there, and then we'll go down the rabbit hole into blockchain and then to ultimately DeFi. So from a centralized exchange perspective, there's probably 100 or 200 exchanges in the world. I think there's 30 of them that represent 99% of all institutional trading volume. We cover the majority of those. Each of those exchanges has their own API. Unfortunately, they're all different, and they're not normalized, and they're not standardized, and they're all fast moving, growing businesses like everybody else in the crypto and digital asset space. So they change their APIs all the time. So just keeping abreast of all of the breaking API changes and having the ability to collect that data, which is often ephemeral, and store that and normalize that so that you can just understand what is price, there's local price discovery processes that are happening maybe in LMAX in the UK versus Coinbase or Kraken in the US versus something in Binance or what have you, as well as in the derivatives exchanges. That in itself is a massive challenge and a massive opportunity, which is a corollary to traditional Refinitives or Bloombergs of the world. Now think of on-chain data as being, effectively the fundamentals. What are the cash flows? What are the economics? What are the incentives that are driving this behavior? And everybody wants to quantify that, whether it be what did I hold when and what price and where did it go to, what, the ability to introspect and to understand cohorts of other investors. Well, if they held that token, what else did they hold? How long did they hold that? Where did those tokens go? Where to be able to get that data, unfortunately, is incredibly complicated, because that blockchain networks are effectively a database, an application server, a incentivized currency, and that's running globally across various different blockchain networks. To be able to extract that data, similarly to traditional IT monitoring, alerting, eventing, search, analytics companies, you need to be able to basically instrument with operational telemetry the entire call stack of what happens in the database, in the application, in the currency, and then the incentives around that. So there's a tremendous amount of instrumentation and operational telemetry there that you would need to understand. And institutions simply, they don't have millions of dollars and armies of people who are deep in understanding crypto economic mechanisms, data ingestion, and the data science to be able to turn that into actionable information. So that's what we do, is we make that simple so they don't have to. And we take this massively decentralized resource of data across centralized exchanges and on-chain data, and pull that together in a coherent way to empower people to be able to embrace digital assets, which is a massively growing space, and it's going to touch every business and every person on the planet.
Yeah, I'd love to jump into that last point. I mean, because that is even more complex than I could have imagined, right? And so that last point, I mean, I'd love to dive in a little more on kind of your vision from this unique vantage point of where is all this going, right? That may be a bigger question than you're interested in taking on, but I think you just have a really interesting perspective in that you have to stay really, really up to date on all this activity, or else Amberdata, it can't do what it does do, right?
Right.
And so I'm just curious your perspective on any trends that might be interesting to people that aren't apparent.
I think this is fundamentally the financialization of the internet, and this is going to be massively, whether you say disruptive or expansive, for traditional financial services. And I think it starts there, because that's really most of the killer applications in crypto today are financial services related. So as you look at that and you say, well, what is the total addressable market of a bank today, or of a financial institution in the United States? Well, there's 300 and something million people in the United States. And then you're like, well, a third of those people have the resources that need financial services. So you quickly come down to a pretty small total addressable market. Now you open that up and say, wait a second, there's 8 billion people in the world, and of those 8 billion people in the world, how many of them need financial services? So many of the financial services firms and banks and institutions are looking at this as a massive opportunity to expand their total addressable market and to innovate and create new financial primitives that can be either create new financial products that can be built on top of these financial primitives that have a total addressable market of billions of people, as well as many more businesses that they could serve just by operating in their jurisdictional sandbox that they may currently operate in financial services. So I see that there's going to be a massive tidal change in innovation, because if you think about, FinTech 1.0, FinTech 1.0 was literally factor payments out of banking. Now you have PayPal, Venmo, name your favorite payment application. And what's happening with specifically around DeFi is they're now factoring the financial primitives of financial services, whether that be, generating an interest rate, yield, whether it be lending, whether borrowing, leverage, trading, et cetera. And they're taking those primitives, just like payments were factored out of banking. You're now seeing that those financial primitives deployed on this global substrate where people can now compose and add together those to create new financial products. And I think most of the banks and financial services companies in the world today quickly realize that, wow, stable coins solve a real problem for enabling people to have fluid, ubiquitous store of value to be able to transfer and transact.
Yeah.
Lending protocols are the new banks. DEXs become the new trading venues. It's just massively disruptive. And then from the retail perspective, I think NFTs are the beginnings of the new fabric for digital rights management. NFTs are cool and get your PFP. That's awesome. But if you think about what's happening with like Bored Ape Yacht Club, how they're monetizing an annuity stream based upon intellectual property rights that can propagate down to people that have sold that previously. This is transformational, and the Disneys of the world and the people who create digital assets are keenly aware of this. So I think we're in the very early days of massive transformation in financial services as well as digital rights management.
Yeah, that's super interesting. So maybe bringing it back to Amberdata specifically, like say everything goes great 5 years down the road, as you're kind of writing these changes that you described, what do things look like for Amberdata down the road?
Yeah, absolutely. So we're investing tens of millions of dollars in the infrastructure to be able to turn this raw, rough, hard to get and understand data into actionable information that will power financial services applications, accounting, taxes, digital rights management, analytics, insights that will effectively position us to be the leader in the world in digital assets information to understand what's happening in the crypto economy, which is going to just become the regular economy, because there's no distinction between the internet economy of 2000 and the economy
right.
of 2022. So we are going to become, if you will, a broader platform than say a Refinitiv or a Bloomberg, which is fairly niche in the scope for financial services, primarily usually in yield or what have you. We're going to become that platform that people will come to, whether they're in financial services or they just want to understand what is going on in the crypto economy.
Yeah, super interesting. And it looks like you guys just raised a Series B. Is that right?
That's correct. We just raised a Series B.
Nice. Congratulations on that. Anything you want to share about that process, or?
I think that we've been pretty fortunate to have raised a Series A, then a Series B almost back to back, and had participation from some of the thought leaders in traditional financial services. And, our Series A was led by Citi with participation from Galaxy Digital and Franklin Templeton and Golden Tree and others. And then the Series B was led by Knollwood, but we had participation from, NASDAQ and other strategics that really enable us to have a vantage point and have access to resources far beyond just capital to build out and define this category and be the industry leader. I think it's a unique opportunity and gives us a bit of an unfair advantage because access to capital when we raised was it wasn't entirely hard to raise money, but to get the right people around the table who are going to help you build the right thing, that's more valuable, and that's hard to do. So we're super excited about the people that are involved and continue to help us build and define Amberdata.
Definitely. Maybe taking a step back, I'm just curious any advice you'd have. I mean, especially one thing I love about what you're doing with Amberdata is you're working on a really challenging problem. And, when so much of the Web3 conversation has to do with speculation or critiques of speculation, et cetera, like you've taken on a really challenging, complicated problem and you're solving it, right?
Yeah.
So I think from that vantage point, I'm curious, any advice for founders building in Web3 that might be helpful, any helpful takeaways?
I think it's interesting is like maybe 3 years ago, what Web3 was radically different. But I think today what Web3 is people are starting to realize that there's business models that make sense. And at the end of the day, you're still going to have customers. It's there. So understand what problem you're solving for who and how you're creating value for them, and do that well and do that better than anybody else. And one of the big misnomers, it's funny in crypto in general, is it's about decentralization. Crypto is really not about decentralization. Crypto is about incentives drive behaviors. And it's those incentives that incentivize participation in the protocol, which in fact drive decentralization. And people get that mixed up. And I think there's a lot of, decentralized zealots that are completely missing the point. And I think the power of crypto and digital assets is this idea of you can have these crypto economic systems that have mechanisms that incentivize participation, whether that be staking to secure the network or whether it be, put an asset with us to secure the protocol and earn a yield, or be a holder of this token and you're a member of a club or what have you. It's really those incentives. And what we're trying to do is we're trying to quantify, because every one of those incentives is code in a smart contract and has an input and an output. So we're trying to quantify the inputs and the outputs of those incentive models and those mechanisms so that becomes valuable information that people can act. Because if you believe in crypto and you believed in incentivized mechanisms that drive behavior, then you need data and you need to be able to quantify that. So I think understanding what problem you're solving for who, I think is critical for anybody that wants to work in this space.
Definitely. So Shawn, what are you working on now, and what's the best way for people to kind of follow along on the journey and maybe get involved?
So what we're working on now is we have very robust exchange coverage, whether that be spot markets, derivatives markets, options venues, and then for on-chain data, we have comprehensive, basically time series account balances and the DeFi basic data like trading data, staking data, lending data, what have you. So what we're working now is build on top of that base and extend that with lenses that are specific to the personas of the people that need the information. So as an actor, what's my interface to Web3? It's my wallet. So therefore, what I care about is, not when I go to Etherscan and I look at, there's this transaction and there was all these, function calls in the transaction. And believe me, Etherscan has done a phenomenal job, and I'm a huge fan of the team over there. But as a retail user, what I care about is like, hey, I participated in this protocol. What happened in my wallet that's specific to that protocol? Did I add an asset? Did I remove an asset? Did I swap something? Did I generate yield in context of me? And then, the lens as someone who's participating in these protocols, perhaps as a liquidity provider. There's that lens as, give me a lens into that pool to understand, did somebody add liquidity, remove liquidity? Did they do a flash loan? Was there a swap? Did the economics of me being a liquidity provider change? And how do I quantify that and understand that to inform my behavior? And then lastly, the lens that we're working on is this protocol lens. So each of these protocols have the ability to effectively create these new assets in some of these liquidity pools. Well, give me a lens into what's happening in that protocol as context, so I can understand what's happening with that asset pool, so I can understand what's happening with my wallet. And via those lenses, which nobody else is building, you can understand your and everybody else participation in these systems, so that you can really identify opportunities to participate or stay out of trouble.
Awesome. Well, Shawn, thank you so much for the time. This has been awesome. And for anyone who's interested in learning more about Amberdata, website is amberdata.io. And Shawn, thank you so much for the time.
Thank you. Really enjoyed the opportunity. It was a pleasure to talk to you.
Great. Take care.
Thank you.